Hey, it's Danielle McCulley here in Seattle, also known as DMAC, and today I wanted to go over the FC Pro current indicator. I just want to show you some strategies that you can use with it, maybe to help you with your entries, help you identify the trend and things like that. So I'm just going to go ahead and jump into it. Right now I have GJ pulled up on my screen. It's the 1 hour chart, and my system may look a little bit different because I've changed a few things on it, but the main indicators are, the Doppler down here and then the current indicator and the sniper indicator, which is going to be your signals. So I am going to delete these extra moving averages, and then we'll just talk about the current. All right, so pretty much you probably already know that it's kind of color coded to help you identify whether the trend is bearish, so it would be red, or bullish, where the currents or moving averages, whatever you want to call them, will actually turn green for a bullish trend, red for a bearish trend. All right, so one of the things that you may want to look out for, let me see if I can find an example. When you're looking or trying to read the current indicator, let me undo this. Okay, so you want to look for, this doesn't have to be the only thing that you look for, but this is a good example. Sorry, I can't talk. This is a good example here. So one of the things that you may want to note is when you see all the currents, or the three MAs, when you see them all tight and squeezed in together, your eyes should actually light up, because usually that's a really good sign of a breakout is about to happen. So you can see right here, you have all three of the currents. They're just like all squeezed up in there together, and then you get this nice breakout to the downside, which, if you were a swing trader and you wanted to hold it, like 360 pips, and you can see, that would be no drawdown on that. But of course you would have to be, watching your charts for these kind of things. So anytime you're looking or analyzing a pair and you see some type of consolidation, and you get all the MAs all tight together, squeezed in there, yeah, you can start anticipating some type of breakout. And it would be the same, if it was coming from down here, and it could break to the upside, and of course, the MAs, they would turn green. But yeah, so that's just one thing that I wanted to point out. So that, yeah, anytime you see the MAs all close together, just be prepared for some type of breakout. And let's see what else. And usually when I can't find an example, like right here, this is on the H4. So they're kind of all squeezed in there together. So GJ will probably do a nice break out. Well, it's already pushing up, but you can probably assume that it's going to keep pushing up, because just the way the MAs are positioned. And let's go back to the 1 hour. I was trying to find, okay, so this is kind of an example too. So another thing that you may want to pay attention for is, and this is not really a good example, but let's see on the 15-minute. well, we'll use this one. But when the MAs are, kind of spread out, that is a sign of the, how can I say it? So if you see the MAs and they're all spread out, that's usually a good sign that, the trend is still pretty strong. So GJ is in an uptrend, but you have these, they're kind of spread out. So it's still got some good strength to it. And another thing that you want to be aware of, let's say you were trying to sell this. Of course, they say trade the trend, but there are some people that do counter trend trade, but it can be tricky at times because, even though you have this reversal here and then you come down here and you have the RSI, pretty overbought down here. So you may be thinking, okay, well, this is a good sale. I'm just going to jump in here and write it down. Well, you have to be careful because this third current, and I'm going to talk about that here in a minute, but, or the second one, price could just come down here and just bounce right off either one of these. So just keep that in mind. Your safest entry, of course, is going to be when price clears all the moving averages. And so that's why when I showed you this example here, when they're all, oh, I hate this thing. Where is it? Okay. So that's why when I showed you this example here, they're all, close together. It's easy for price to, clear them going to the downside, and you don't have to worry about, it bouncing off, another MA or anything like that. But you do have to worry about, these key resistance levels, because price can also be rejected at those levels. But that's why, you have to use the Doppler down here too to help you confirm everything. But usually, when they're all squeezed up like this, it's a sign of exhaustion and consolidation. So, if you're scanning pairs and you see all the MAs like that, you may want to put that on your watch list. All right. And so I know for some people, they don't like a lot of MAs and stuff on the charts. So I wanted to show you this. Let's see if you can go in here to the current indicator. And so you can just turn off, well, you don't really turn them off, but you can change the color to none for the first one and the second one. And that's going to leave you with only the third one. Let me get rid of, this is not on there. That's something that I added. Some of you were asking about that in the Forecaster Pro Telegram chat group. The yellow arrow, that's something that I added. If you're interested in it, just shoot me a message and I will tell you about it. But like I said, that one, it does repaint. So I don't know. People are, they don't like when things repaint. So it may not be a good addition for you. But anyway, getting back to this third current. Now, this one to me is the most important current because it really does help you. You can just use it by itself to help you identify the trend. And it's the same. It's going to turn green for bullish, red for bearish. But you can also use this for your entries. So how do you want to do that? Let me find an example. Okay, so I guess this would be a good example here. So you can also use this for your entries as well. You know, if you want to be safe and you're patient and you don't want to deal with drawdown and stuff like that. Let's say you were looking to sell right here. So what you would do, even though you got this would be a good signal because it's coming off of this hesitation zone, hesitation down zone. And you got the signal here. So you could enter there and still get 0 drawdown. If you entered there for 96 pips. And someone was asking, how do you know where to take profit? And you know, you can just take it from zone to zone. Like you can use the different support and resistance level for potential take profit targets. Okay, so with this third MA, what you want to do is you want to wait for price to break it and close below. And once it does close below, it's going to come back and retest. Like you can see that it came back and retest. After the retest or on the retest, you can actually enter. So, you know, you miss a few pips, but let's just say you were using bigger lot sizes and, you know, you wanted to minimize the drawdown. This would be a good strategy for that. So you wanted to break, retest, and then you can hop in with no drawdown. And it's always going to do that. Like sometimes you won't get a retest. If you just get a impulsive move like this out, it might just keep going up, and that's fine too. But majority of the time, let's see on the 15. Let's see. So you can see right here, price broke below, closed, retest there. This is also at a key support and resistance level. So after that retest, you can enter. This is on the M15, and you can take it down for 100 pips. And sometimes you have to be careful because it may give you like a false, you know, break. Like this one. This would be kind of like a false break. This probably was a news event or something, but it's just something to be aware of. And like here, sometimes the break is not always clean and clear. It might be a little choppy. Break to the upside, retest. After the retest, you can enter. There would be no drawdown right there. 53 pips. And let's say you wanted to enter here. So if you entered there, you're going to get a little drawdown because it did this would be considered like a fake break because then it pushed back up to the upside. So you just have to be aware of the, you know, the false breaks and stuff like that. But yeah, pretty much that's it. So for those of you that don't like all the moving averages on your chart, you want a kind of a cleaner chart, you can just basically use this because anytime it's trading above this third current, it's going to be bullish, and anytime it's trading below, it's going to be bearish. So having a hard time with that thing up there. Yeah, anytime it's trading below, it's going to be bearish. So, but you can see how price just, yeah, it respects the moving average pretty good. All right, so hopefully you find these tips helpful. Yeah, that's pretty much it. Just wanted to go over the current indicator, and in the next video, I may go over how you can use it with the wrinkle confirmation indicator. I'll do that in the next video because I know I just shared that in the group, and some of you have already applied it and you're getting good results with it. So I will go over that in the next video. But yeah, that's all I wanted to go over. Just the currents and what to look for. Remember, this is another example. You know, when they're and it doesn't necessarily have to be all three. It could be just 1 and 2, but still you got 3 right there. When they're real close together like that, yeah, you definitely want to pay attention because you can get some good pips. That's 40 pips right there. All right, so that's all I have for you today, and I will see you in the next video.